I noticed one of the things you called out then is the cash flow cycle of money's coming out first, sales come later, we get paid later, and we have to figure that piece out. And so maybe a normal small business owner might be doing some form of cash accounting or profit first accounting. Certainly in a service business like mine as an agency, that might cut it. But in e-commerce, there's all this complexity around inventory and who gets paid in which order. How do you navigate that? And how do you start to talk with a business owner about this? Maybe they're product or sales or marketing focused. They didn't get into it for this accounting piece of it. How do you talk with them about this?
Yeah, I think one of the major challenges, as you have alluded, is around how to appropriately account for inventory, right? I think a lot of people consider I've sent money out, therefore it's an expense in my business. What's unique about accounting is there's certain rules and regulations around how and when you're able to recognize certain expenditures within your business. So one of the factors that's important for us to have conversations about is the basics of financial literacy as it pertains to accounting and reading and interpreting the story of numbers that comes from your various financial reports. So there's really three financial reports that provide the most meaningful insights to you as a business owner within your business. The first, as everyone knows and is probably most familiar with, is a profit and loss statement or an income statement. It simply shows you the sales against those expenses that have been recognized in your business across a certain time period, whether that be a year, a quarter, or a month. Second to that, and sometimes more important to businesses, is a balance sheet. So a balance sheet lists out the various assets you have within your business, the cash being held in your bank accounts, the value of inventory that has been purchased that has either is sitting on a boat making its way to an Amazon facility or a 3PL here in the US, or is sitting in your warehouse ready to be sold. So what we do is help our sellers understand through building up trust and having those conversations with them around the basic concepts of financial literacy and the timing in which money that's being spent or the value of inventory that they're holding should be represented on one or either of those financial statements. I'll mention the third briefly, and this is quite critical. I think a lot of accountants and the content you'll see from e-com specialist firms like ours is often a push to move to accrual accounting. And very generally based is the idea that you're able to align your spend on inventory that may have been done months prior to the same month in which the sales are generated. For kind of a basic framework, if I'm someone that had spent in July on a PO and for inventory that I hope to sell during Black Friday, under that cash basis of accounting, you would recognize that spend in July when you sent the wire. You're not going to receive the sales and recognize those proceeds from the sale until November. So what accrual accounting allows for you to do is when that initial wire is sent for inventory, is recognize that value on your balance sheet in that inventory as an asset. So it's something of value your business holds. Then in November, when you sell those goods on Shopify or Amazon and you have the income, you can then match the income with the expense for the volume of orders across the various SKUs to assign the cost. So then you have a clear alignment of how much profit's being generated on those products. So that's quite unique. But when you're so singularly focused on accrual-based accounting and profit, you lose sight of the fact that profit recognized in November is not entirely all the cash that you're going to have available, right? You also need to be very mindful as an e-commerce operator of the profits being generated. And I'll share a tool, and I hope to get to something a bit later that helps break down how to understand this. But you also need to understand the timing and flow of cash through your business. often another great tool for sellers to understand alongside their unit economics and their contribution margin is their cash conversion cycle. There's amazing stories that anyone can Google and find about the Gymshark success and having an opportunity to buy on terms and pre-sell, essentially generating a scenario where they're receiving the proceeds of sales before they're required to spend money for the goods that they've actually sold.